Welcome to VAR India News Hour. Why are FDI inflows to India declining? Flows to India declined to $45 billion in 2021. However, a flurry of new international project finance deals were announced in the country. In its latest World Investment Report, UNCTAD said that FDI inflows to India declined to $45 billion in 2021 from $64 billion in the preceding year. While the United States remained the top recipient of FDI, China and Hong Kong also retained second and third position respectively. Among the top 10 host economies for FDI, only India saw a decline in its FDI inflows. However, outward FDI from India rose 43% to $15.5 billion in 2021. UNCTAD said global FDI flows recovered to pre-pandemic levels last year, growing 64% to $1.6 trillion, but the prospects for this year are grimmer. This year, the business and investment climate has changed dramatically as the war in Ukraine results in a triple crisis of high food and fuel prices and tighter financing. Other factors clouding the FDI horizon include renewed pandemic impacts, the likelihood of more interest rate rises in major economies, negative sentiment in financial markets, and a potential recession. UNCTAD foresees that the growth momentum of 2021 cannot be sustained and that global FDI flows in 2022 will likely move on a downward trajectory, at best remaining flat. However, even if flows should remain relatively stable in value terms, new project activity is likely to suffer more from investors' uncertainty. Other corroborative evidence of diminishing foreign investor interest was provided last December by Union Commerce Minister Piyush Goyal on the floor of Parliament. Between 2014 and November 2021, as many as 2,783 foreign companies with registered offices or subsidiaries in India closed down operations with a total of 12,458 active foreign subsidiaries operating in the country. The exit of one-fifth of foreign companies is indeed a huge number. To be sure, there are various reasons for this, such as completion of business objectives and projects, restructuring by the parent company, amalgamation, and other management decisions. But the reasons also include uncertainties over the policy environment or regulatory hassles. There is definitely a cause of concern if foreign investors are choosing to exit rather than they stay invested. Experts say if foreign capital is to contribute to the India growth story, it is necessary to incentivize a much larger proportion of FDI inflows towards the building of greenfield factories, industrial parks, and other infrastructure. Such investments depend on a more stable policy and regulatory framework than the streamlining of procedures and digitization of paperwork that have improved India's ranking in World Bank's Doing Business indicators, which has now been discontinued. Reform to free up the land and labor markets and improving the environment to do business in the states is imperative. Let's look into today's headlines in VAR India. Offensive Security to offer free access to penetration testing course. Offensive Security, the developers of Kali Linux, have announced that they will be releasing a free video training course later this month on penetration testing with Kali Linux, which will be offered in the form of a live stream course. During the course, the applicants will be prepared to take the Offensive Security Certified Professional Examination conducted before the pandemic started. Offensive Security launched the OffSec Academy, which is an online course consisting of 13 weeks in length that prepares users for the OSCP examination. The company will now be live streaming their online offering through the Twitch streaming platform OffSec Live. Satyam Nathani exits BharatPe. BharatPe's founding member Satyam Nathani has resigned. Nathani's resignation comes just days after the exits of Chief Revenue Officer Nishit Sharma and Head of Institutional Debt Partnerships Chandrama Dhar. Nathani helped in building the company's tech products and the backbone of the tech team at BharatPe. Nathani joined BharatPe straight out of college and led the building of the first prototype BharatPe's QR code, besides other offerings like PostPay and 12% Club. Felix Capital raises $600 million for Web3 exposure. London-based VC company Felix Capital has raised $600 million in its fourth fundraising round. The company has been investing in commerce and money tooling startups and is planning to use part of the funds to increase its Web3 exposure as part of its new business strategy. The company explained that these funds will be used to back another 20 to 25 companies over the next couple of years across Europe and North America. India's first display FAB to set up in Telangana. Elest, a subsidiary of Rajesh Exports, will be setting up the country's first display fab facility in Telangana with investments worth Rs 24,000 crore. The Telangana government signed an MOU with Karnataka-based Elest for the proposed fabrication unit, which will manufacture next-generation displays for smartphones, tablet computers and laptops. Elest would be setting up the display fab in technological association and with technology inputs from some of the most advanced and finest research centers across the world. Altcoins see major dip due to risk-off sentiment. Bitcoin and the other leading cryptocurrencies all crashed in value, erasing mild gains. Bitcoin has managed to climb into $31,000 territory earlier last week, but has now fallen to its lowest in 18 months as US inflation data continued to be desolate for risk assets and crypto alike. The second most popular cryptocurrency, Ether, has also dropped. At the time of publishing, Ether is valued at $1,457 on CoinSwitch Cuba. On global exchanges, the price of Bitcoin stands at $25,861, while data shows that BTC's value has dropped by over 14% week to date. That's all for now. Please like, share, comment and subscribe to Var India News Magazine. You can download the Var India app from Google Play Store and Apple App Store for the latest news and updates. Stay tuned. Thank you.